Now let's take a look at the bigger picture. Ryan Payne is with us, president of Payne Capital Management. He's quoting songs to us, right? You started to bring up Bob Marley. What's going on here?
What makes you think of the market more than Bob Marley?
Yeah, tell us, explain.
Well, I put the quote, "Don't let them fool you," from the song, Would There Be Love? I can't remember exactly what the song is.
Don't let them fool you. We know the song. Okay, so
right,
why don't let them fool you? What goes with that?
Well, we had a lot of the strategists on Wall Street come out in the Barron's list this week. They had 10 strategists as their average prediction for next year for the S&P 500 was up a measly 4 or 5%. And if you remember, most strategists were very muted on the market this year, and the markets just had this magnificent run. So I suspect this upcoming year, we could see more big moves on the upside in the market, and these strategists, again, with their more muted view, is probably going to be incorrect.
Yeah, and pretty soon we'll get to completely erase that sell-off that we saw in December, and our one-year numbers will really be great because they won't even include that big sell-off, right? We'll see, or we'll have a different one-year chart, no doubt. And the optimism is there for 2020, but the question is how much growth will we see?
Well,
Earnings growth, for example.
Yeah, you hit the nail on the head. So I think it's going to be more about earnings growth. I mean, this year earnings were pretty much going to be flat when we look at it. But what you saw is the multiple on the market got so cheap at the beginning of the year. And you talk about December last year, your forward earnings are like 15 times forward earnings, which is just dirt cheap. So really, we saw this year markets really just recovering. So next year, you see growth rates up again on profits, and I think profits are going to be the real driver of the market in 2020.
So you're not worried about the global picture? What are you thinking about when you talk about the global picture, manufacturing? These are some of the things that people are worried about.
Yeah, that's all you've heard all year, but I think we're starting to see a trough in all those things. In fact, the numbers start to pick up globally last month, according to
some
JP
bottoming,
Morgan.
maybe, right?
Yeah, exactly. So, you're already seeing the foreign markets start to move. I mean, they're back to their 4-year all-time highs. So you're starting to see some momentum in the emerging markets, even the frontier markets, which are kind of your emerging markets, and even developed markets like Europe, with Brexit now looking like we might get an easier or a light Brexit. So all these things are looking really, really good.
And I saw when you were talking about treasury yields, for example, you see those on the rise. You're saying get in now.
I mean, don't let them fool you. So go back full circle with my Bob Marley quote. So I think right now, the thing you don't want to do is think the market's up, it's up to an all-time high, it's not the time to get in. The reality of it is there's probably more upside here, and I talk about this all the time, but investors have gotten out of the market all year.
You have been an eternal bull. Is it tiresome to be so bullish all the time?
I mean, it's hard to be so right all the time. I wish for once I could come on the show and be wrong, Nicole, but it's so hard to be this good.
But people are making money. I mean, that's the idea, right? So what's the investment strategy? What are your stock strategies for 2020 based on the idea that we're going to see even more than 4 or 5%?
Yeah, so I think the S&P probably is one of the more higher valuations if you look at it globally. So we talk about the foreign markets, which I always come on and tell you how much I love them, and I've been right. So I think, you still want to make sure that you're diversified globally. If you look at value stocks versus growth stocks, things like financials, which you just mentioned, are up today. All those things are relatively cheap compared to growth stocks, which I would argue are actually overvalued here. So you want to make sure you're spreading that money around.
So you said financials and international. Those were two things that you liked, right?
Absolutely, right.
Okay, so give us the list. International, some exposure, some financials. Is there another sector that you like?
I like energy as well. I mean, we're starting to see West Texas crude is now above 60 again.
Yes.
You're getting some really nice dividends, and even globally, if you're looking at things like Royal Dutch, Exxon more domestically speaking, but these are all companies with great dividends. Oil prices could go higher here. Demand for oil is going to keep going up. So I suspect that's another good place to be starting to allocate some of that cash.
Right. Everybody loves the dividend stocks, no doubt. So when you talk about value versus growth, where do you stand for that?
I mean, value is so much cheaper, right? So you don't want to make the mistake of, I'm going to get back in the market and put all your money into growth stocks. And
don't chase.
Don't chase returns, right? Have some exposure there because markets can stay irrational longer than you can stay solvent, but make sure that you're getting the value in your portfolio, getting those international markets in your portfolio.
And the Fed, you still think the Fed is on our side, huh?
I mean, it's an election year. I don't think Jay Powell's going to rock the boat and start to raise interest rates, even if we see growth rates for the economy come in better, which I think could be that could happen as well, because the numbers keep coming in better than expected, and I think that'll continue.
Even today, President Trump was looking for the Fed to lower rates. put it out there once again. The administration likes the rates as low as possible, I guess.
I mean, he's the king of debt.
You surprised to hear that tweet that he's asking for lower rates once again?
I mean, the king of debt likes to use leverage. No, I'm not surprised, but I think Jay Powell is probably at his floor in lowering interest rates. The question now is he going to keep rates where they are? I think he will, at least through the election.
Alan Greenspan said he's told his former colleagues to just stay the course. Don't listen to any interjections or advice. Thank you so much, Ryan Payne. Great to see you, president of Payne Capital Management.